Heavy early voter turnout is reported nationwide ahead of Tuesday's midterm elections, and historians say Wall Street typically experiences a few financial bumps before a potential political shift. Well, this morning, tips on how to protect your money. Our friend Justin Halverson is here with us. He's the founder of Great Waters Financial. Thanks for being here with us on this Thursday morning.
Thanks for having me, Adrienne.
So a lot of people might be wondering, what do the midterm elections have to do with my finances?
Well, as we can see already, I think they're already having an effect on the markets. October was one of the worst months in market history, at least in the near term. And so the reason the elections affect the markets is because of uncertainty. The stock market likes certainty, and when we don't know who's going to be in power, certainly that causes uncertainty, which causes the markets to potentially stumble.
So that uncertainty, I can only imagine, would play a role into investing. Maybe people are not as generous. Maybe they're a little more timid now.
Well, it ultimately causes people to allow their emotions to get the best of them. And if we allow emotions to get in front of our investments, we end up selling in a fearful mode, thinking the markets are going to go down or allowing them to go down, and we sell at the bottom. And then it goes up, and then we let greed kick in, and we buy at the top. And the rule is to do the opposite, buy low, sell high.
So at this point, if people are at home watching and listening, what should they do if they just sold?
Well, ultimately, if they just sold, I don't know if I can give advice on that, but the bigger picture is you have to have a plan. Have your investments in line with your overall plan for your future, looking at the long term, not the short term, and making decisions not based on short-term volatility, but on long-term goals and objectives.
And when you talk about the long term, what questions should folks ask? How do you know whether or not you're set up for the long term?
Well, you should be asked if you're invested according to your risk tolerance. If this short-term volatility has you panicking, maybe you're invested at a too high of a risk level. You should ask yourself if you're diversified, okay? If you have your investments diversified, what you know is if they go down, eventually they're going to come back. And so those are some things we could look at there.
I know last week, I think it was when the S&P 500 dropped, I didn't worry about it because we've seen this happen before.
That's right. So the other things you can look at are the purpose of your investments and invest according to that purpose. For example, if your investment objectives are to get a 5% return to accomplish your goals, but you're invested like you're trying to get a 10% return, that may be causing you to put too much risk on the table.
We were saying before the segment started that once the election is over, hopefully everything will calm down.
Yeah, I think so. A couple other things is investing according to your age and your risk tolerance as far as the time horizon of how and when you're going to need the money. If someone's in their 20s or 30s today, they can have as much risk as they want. If you're in or near retirement, maybe you need to scale back some of the risk because you may be spending the money sooner than later.
20s or 30s, go ahead, take a few risks. You have lots of life to live. If you're retired or thinking about retiring, maybe be a little bit more cautious.
Absolutely.
Thank you for your tips today. Of course, we will share all of his tips on KARE11.com. If you missed some of them, we will post this segment and a link to Justin's website on our 11 a.m. show page.